Hello guys, glad to have you on board again today. As expected, you guys have been choosing the cyclical podcast today as a choice I gave you in the Discord. I was pretty sure you would have picked this one anyway, but I wanted to restore a little bit of democracy and give you guys a chance to vote rather than picking these topics for you. So anyway, let's get it started. So today talking about cyclical activity. Most of the surrounding topic regarding the way it's used by the strategy has been uncovered into the PDF manual. So normally I hope you're already aware of this one. So let's say all the basics are in here. So we're just going to dive way deeper into what this is. A first somehow theoretical introduction. So it's going to be a little bit boring. Don't worry about it. I just have to get there anyway, so you can understand the other things later on. So we're talking about sine wave, we're talking about cycles, we're talking about how to use them into speculative trading strategies, not just necessarily mine. I mean, you can pick those informations and do whatever the fuck you want with them. Just make sure you use them into viable context. So if you just pick those information and say, all right, that's magic, I want to use it, then all right, fine, try it out. You'll end up with the consequences, and believe me, they're not going to be that positive. So as usual, these can be valuable informations as long as you use them in a reliable context. Take those things, put them out of context, and you're going to end up with some problems. So cycles and sine wave is today's topic. Like, you know, cycle is something that anyway, I tend to say, whether it's market related, speculative related, human related, nature related, whatever the fuck it is, universe related, it's all about fucking cycles. But the problem is, cycles are just like everything every human being is trying to do when it tries to understand any systematic behavior, any system I would call. Like, when we try to understand something, we try to break it into little pieces to try understanding what the fuck goes on. Then we learn, we try to understand the relationship between the components of whatever the fuck we're trying to understand, and we try to study how they behave all together. So you need to understand that if we got to have a look at cyclical activity into markets, it's simply because we do have a look at cyclical activity every fucking where. Simply because that's how human brains process information. We look for patterns. So I could go into very, very complex explanation about that. That's the chemical structure of the brain or whatever that is. There are a lot of explanation, and I would even say possible explanation. So like the conclusion which I most of the time will get to is that anyway, if you try to understand, you will hit a very solid wall every time. And no matter how hard you try to break it, you never will do. Because the problem is when you break a wall, you just figure out there's another bigger wall right after. So it's an endless fucking story. If you're trying to understand whatever surrounds you, then once again, I personally think it's a significant waste of your time. Because understanding it all is not the problem. You'll never get it, all right? Like, I don't know, maybe I'm just halfway through my life, but it didn't took me long to really figure out that, all right, one thing to understand is pretty much understandable. But the problem is, it makes no sense, and most people can lose their entire fucking life trying to understand. Just as well as some people just surrender right at the beginning. They figure out it's too complex, so they don't try to understand it, just let themselves go toward whatever waves the lives will put in front of them. So I think there's an in-between stuff between trying to understand whatever the fuck surrounds you and wasting so much time and energy doing so, and not trying to understand at all. There are some in-between places in which you can be, and this is where I'd like to teach you where to go. So, understanding, waste of time, most of the time, waste of energy as well. Not understanding is, I mean, if you do this, I think you're not even listening to me, because anyway, we're trying to put some decent risk management out of pure chaos, which is market behavior. So if we're trying to make sense out of something that just doesn't make sense all by itself and by definition, then we're purely wasting your time otherwise. So there is this in-between area in which we need to settle down. And this in-between area is that we're going to take advantage of what we just said, that no matter what, human beings want to understand what surrounds them, and the way they try to understand is by breaking this thing into little pieces and trying to figure out how those little pieces behave all together, to try to understand how the system works. That's simple as that, right? And if you think it's smart, you'll figure out that this is how the entire scientific community is working. When we're building an experiment, that's exactly how we do. We take something, we break it into little pieces, we replicate these things multiple times to try figuring out fucking patterns. And that's how we do all the time. And actually, that's also how computers do these days. They run multiple times things and they try to find patterns. That's how the entire IA system is working. The AI is working. That's exactly how machine learning works as well. So it's crazy to see that we all behave the same way. Even machines are somehow doing it with their own manner. It's not exactly the same, obviously. The little difference is we could go down this road as well for hours, but that's it, right? Let's take that as an assumption. This is how we study things. So let's start to focus on how could we break markets into little pieces. The first thing we'll do is what's making markets? What's the chemical composition in some way? And just like we would do, like you're trying to figure out the water cycle, how water gets to be spread out, like it can be vaporized, it can be a solid or liquid, right? The multiple states. When you're trying to study water, what the fuck are you going to be doing? Are you just going to staring at a drop of water? No, you're not going to be doing this. You're going to having a look at the chemical structure, how it reacts to our pressure, and you're going to think at how those atoms are behaving one with another depending on multiple changing factors. All right, and you're going to say, all right, these atoms react differently upon pressure. So pressure is one of the many things that can vary its own structure surrounding this thing we call water, right? But what makes it change is not necessarily magic. It's the way those atoms interact with each other, mostly linked toward pressure. But not only, it's not just that, all right? So let's make it for market. What's the composition of market? What makes markets? All right? Prices, but who moves those prices? Who or what is moving those prices up or down or stuff like that? So we'll get down to the tiniest little pieces of markets, which is the decision. The problem with market, or it's not even a problem, but what makes the market is a shit ton number of people making decisions. Right? So you can try breaking this thing into little pieces, you always get to this little thing. So what makes the market is a mess of multiple decisions. But who makes those decisions is what really matters in the market. So back in those days, it was just a few guys running into a trading floor and agitating paper, trying to buy and sell some stuff for their clients. So obviously these things have been changing over the years. We've got a lot more computerized, and nowadays I would say like 80% at least of our market orders are executed by robots. So, and I would say even probably 60% of the overall traded volume is executed by fully independent artificial intelligence trying to figure out where to buy, where to sell. But anyway, even if you try to think it that way, you're not even down the little pieces, all right? You're just at the intermediaries surrounding the actual decision of some fucking one wanting to invest, saying, all right, I've got money and I want to buy financial assets, all right? That's the tiniest little piece you will ever get down to. Markets are there for people to sell stuff and buy stuff, to exchange money, and most likely trying to make money out of it. So let's get to those little pieces. What's important in here is the human. Whether the market is robot-based today or not, it's still backed by human decisions and in the most likely manner to bring some money for those fucking humans behind them. So it's all about that. It's all about human. So what we need to study market cyclical behavior is to study the fucking human cyclical activity. And in order to understand that, we'll start by the basic of cycle. All right? What is a cycle all by itself? So I'm sorry, this is the stupid mathematical, geometrical type of stuff that you're probably not going to like. Like, you will feel like you're getting back into your old grades when you will learn that by your teacher. So anyway, I'd like to get there just to make sure that we're on the same page, because not everyone necessarily made some studies or not the same levels and stuff like that. So let's assume a cycle, all right? What we call so you generally learn and hear about cycle this way, like the sine wave and stuff like that. So you'll understand, if not already, how we go from this, which is a circle, a cycle, cyclical activity, to a sine wave, an oscillation. This is simply this thing is just how this behaves through time. So you need to understand that this is the same thing of that, but time related, time printed. So now what's a cycle? A cycle is basically, you're in a fucking bubble and you can't get out of it. It's simple as that. You just can't, all right? It's fully bordered and there are no corners. The only thing you got in here, all right, is that inside this cycle cannot necessarily be a perfect circle, all right? You can have cycles into altered ellipses or stuff like that, right? We're just going to go down the easiest path in here, right? Let's stick to the simple things. So let's take a perfect cycle, its center gravity points, and what we're going to be doing is that you're going to be taking this thing, we're going to call that the phase, all right? Because what's important into cyclical study is that you get to understand what the fucking phase is. Phase is basically how you position yourself into the circle. It's called the reference point, call it that way. So generally we tend to use the neutral value, because what we do when we study phase, we generally study angle, all right? So it's likely the angle of this thing. So let's just double it, all right? And let's say, for example, all right, this is the neutral phase, 0 degree, all right, a flat fucking line, no angle, and we generally take out of this reference 0 value the angle of this thing. We always move in this thing like clockwise, all right? So what we do is that generally when you move in here, we would say, or for example move in here, we just have a 90-degree angle, all right? So the phase will be 90 degrees, all right? If we go there, if we go there, all right, it's 180 degree, but it's also minus 180 degree, because basically, who tells you that we've done this rather than doing that to get there? We don't know, all right? So either we shifted 180 degree negatively, and then we oscillated backward, all right, basically counterclockwise, or we down, all right? So you need to understand that. That's really important. It's all about reference point. So this is the usual way of study. And how we do, we're going to set a natural, magical, perfect behavior. Like we said, perfect circle with a perfect centered gravity point, a perfect straight line to study it, and a perfect analysis through time. So we're basically going to take a clockwise behavior with a constant speed, and we're just going to basically roll this thing. And what you're going to be doing is this, all right? Constant speed, all right, and if you represent that through time, you'll get the perfect sinusoidal movements. Basically, we start there, all right, we go down, and as you can see with a constant speed, we're basically, all right, just make it better. Just have a look at the cursor. You know those cursor lines, the vertical and the horizontal projection, so they're pretty grayed out. I'm not going to change that, but try to focus on this. And you'll see this, all right? As we go down, we go fast. As we reach out to the bottom, we're still constant speed, but have a look at what the line does. It spends a lot more time into those areas than those areas. That's absolutely normal, all right? I hope you do understand that. That's pure physical basic stuff in here. So you get the oscillation. So as you go to a full cycle round, you get the perfect cycle, the perfect sinusoidal move. All right, so like I said, this is perfection. In reality, certainly nothing is perfectly circled. So, all right, most of the time you're going to have ugly ellipses, and just do the same thing. In ellipsis, where is the center of gravity? Can be there, can be there, can be there. And out of this, you get the same different things. If we do the same example in here out of an ellipsis with a shifted gravity center, you're going to get a totally different render of this sine wave. All right, let's get to understand. Let's take this thing for example and try to build what the sine wave will look like even if we go with a constant speed. All right, like in here we maintain the constants in speed and we're just going to change the shape of our reference circle. All right, and also the positioning of the reference point. Okay, so in this thing, in this beautiful mess, and we're just getting it started in here, we're just shifting, we're just testing the different reactions about the same components, cyclical activity of our model. All right, so we basically start in here. All right, what we're going to be doing is it goes down pretty fast. We slow down a bit in here. All right, this is what we do. All right, we go fast. Damn it, we go fast at the beginning. Shit. Make it. We go fast at the beginning. We accelerate in this area. Accelerate sharply. All right. And then we tend to slow down and accelerate at the end. All right. So what we'll get in here is an alteration of our beautiful sine waves. All right. We're going to spend a lot more time in. Oh, sorry. We're going to spend a lot more time into this area. Slow, slow, and bam, surging in the end. This is what we'll get. All right. Well, this is not exactly this, and the reverse in here will be. But what we do in here is that we basically shifted, as we shifted the reference points, and as we shifted the overall structure of our circle, which is now an ellipsis based, we altered many things in here. What we altered is the phase behavior through time. You need to understand that. Right? The phase will always oscillate for 360 fucking degrees. All right? But the thing is that as we move on clockwise perfectly, what we're going to alter is the shape, the time, and the time representation. There's also another factor we need to talk about. All right? Out of our perfect circle, let's go back to it, is this is not just about phase when we study cycle. Though, like we said, we'll sum up all the informations afterwards. All right. So, core information is we study phase. All right. This is important for you to understand that. These are the keywords you need to figure out. So, phase, we're talking about context, or not. When I say context, is most likely what I was calling the circle. So. No, context doesn't mean any fucking thing. I would like to say, I'm looking for this word. I don't know how to say that in English. It's circumference. Give me a second. Yeah, that's it, the circumference. So, circumference. It's like the circle reference of our stuff. All right? The reference point. Which is the gravity area or center of gravity, call it that way, right? Reference points, all right? Shape, speed, all right? I'm going to put things out of this, all right? So we're going to try putting those things into market behaviors afterwards. All right, and try to translate those ugly mathematical behaviors into things you will be more easily understand as you use market words related to them. So, like we said, speed, which is varying. All right, so all those things can vary. The phase is varying because of circumference. Right, this is what we study. This is what alters the study purpose. What alters phase is the circumference, the reference point, the shape, and the speed. What we call the phase is basically this, is phase through time. All right? So, speed is basically what we relate through how fast these things goes. Right? Though the cycle has a phase and has a phase and has speed. These are the mostly important things we get to study. What's likely going to alter those cycles the most is how the phase behave regarding the circumference, reference points, and shape of those structure of the overall context we're dealing with, and how fast this thing goes. All right? So now let's get to it. All right? We've got our beautiful sine wave. What sine wave is basically, all right, let's try to add a simple sine wave in here so you get to the point. I'm going to use this one, it's simple for you to get. So, like we said, this is natural beauty, all right, like the hypothetical, perfect cyclical stuff. We've got a circle shape, we've got a centered gravity point, and we've got a constant speed. That's great, all right, that's perfect. We've got everything we need, okay? And this is theoretical, this is what we get. Right? This is what we measure with my tools. Though obviously my tools are out of multiple stuff. For those who really care about it, I'm using an in-between stuff between the Hilbert function and the John Ehlers function of sine wave measurement for financial markets. But the thing is that one is too slow, the other is too harsh. And I wanted to have something in between, but still no laggy. So it's an in-between stuff I created. You'll never get my math at some point, but anyway, it's not really what matters. What matters is it renders what I want to see. What matters is how you're going to use it, because like I said, you don't know what the methods are, so you need to understand what this is so you can properly use it. So what we have is totally different than that. Right? So this, like we said, this is pure theoretical stuff. This is what we would like to get to magically forecast the market, because in that perspective, let's make it market related. Let's take our big circle, which we talk about, we're going to say what the fuck this is related to market, then let's make it simple. This is the usual reference point, we're taking the zero angle, right? Fine. Now let's say we start there. It's more interesting because that's what we care about in markets. This would be, consider it as a cycle, this will be how market price behaves. In here we would have expensive prices probably building a market top, and in those areas probably building a market bottom. So in this beautiful reference circle, what we're going to be doing is that we're going to care about this, and we're going to care about that area, and only these areas. Right? Like these are speculative areas in which we can speculate to buy, speculate to sell. What we're going to be doing is basically when this thing is going clockwise or anti-clockwise, who gives a shit? The thing is that we'll basically, when we go there, have more chances to go there rather than staying here forever. Right? That's the thing. Normally we're oscillating, so we're going from North Pole to South Pole. All right? Interesting buying area, buying timing, and interesting selling timings, cycles, all right? So that's what we do. The thing in here is, like we said, this is the perfect cycle we're dealing with. But the thing is, in here we're talking about humans, we're talking about speculation, and the first thing that alters human behaviors is the impatience fucking bias. So we're always going to talk about the same things afterwards. Huh? Hey, yes, we will. So, the first alteration we do out of this perfect reality we should be into if the world was perfect, in which basically we constant speed move, whatever, in a perfect cycle. So in here, let's still stick with the perfect cycle. If we add human behaviors in this, human speculating behaviors, and if you consider that the North Pole is where sellers are interesting to sell, and the South Pole is where buyers are interesting to buy. You'll figure out that most of the time people are impatient, so what they do is that they basically think that they should sell early, and they sell early, and they're going to try to buy way too early as well, which means naturally we're already altering this beautiful sine wave into something that looks more like a square-shaped thing. So it's not a square, but it is, what it means is that we're naturally attracted by those speculative areas, not necessarily for decent reason. Most of the time it's a lack of patience that drives us to act faster than what we should. But what we do is that we basically start to not caring about those areas, those intermediate area, and rapidly oscillating from bullish to bearish. All right? We want to make things rational, though we don't like them when the market is both bullish and bearish. We don't like range, so we want to make sense, and we want to be either bullish and bearish in this range. So this is how we first alter. This is human behavior in here, is altering those things. So instead of a natural, beautiful sine wave, we start to get something more like a square shape. We reject non-speculative area and tend to believe that every prices are interesting. Okay? The second alteration we make is not just because of this, all right? It's because of humans are having a natural stuff. Well, human is a social animal. The most socialized animal I've ever seen. So the thing is that basically, even if you don't like that, the thing is that naturally, chemistry, whatever that is, it's complex answers out there as usual. But if you have two choices, two options, basically purely equal options, and one will lead you to loneliness, and the second one will lead you to socialness, naturally most of human beings will figure out the second one. So out of equal choices, we'll always figure out being together rather than being alone. That's how human behaves. So this is introducing a second alteration of our thing, which means the market isn't necessarily and never will be equal. Those beautiful circles we're talking about, they're not there. They're not like that, because any way, the market is never like that. The market is always, consider this, like we said, those two magnets. There's always one magnet being bigger than the other, because there are natural trends in market. People tend to follow others. They tend to magnify the upper magnets if prices are moving up, right? So what this does is that basically we're going to alter speed by those things. Let's assume that now that we know that we're accelerating those areas, like we're rejecting them because we rapidly want to go from speculative to speculative area, even if that's a freaking mistake and we should spend much more time working those areas out. Well, anyway, so we've got a faster magnet that slows down speed. And now what we're going to have is that we go rapidly down, we slows down a bit, all right? But this magnet isn't that big, so bam, we accelerate and we spend a shit ton of time. We're freakingly slowed down by this magnet. So what I say makes absolutely no sense. Magnet don't slow down things, but anyway, that's just an image in here. So we get our third alteration for the beautiful, the theoretical model. All right, we get this. Like we said, trends will take our beautiful square-shaped stuff and put it into, all right, we rapidly go down, we spend a little bit of our time, and then we rapidly go up, and we spend more time. But there is an asymmetrical behavior because there is trending behavior for the social reasons we just talked about. These are natural human behaviors. You can try to fight it. You're not just going to try fighting nature. So anyway, there are trends in the market just because we're fucking humans. And even if the market gets robotized more than anything else recently, still means we have humans behind them. So, I mean, they can try hard. I tend to believe that as long as humans will be market-driven, as long as markets will be human-driven, even if that's with intermediate robots actions, they'll still be following those same cycles. And the reality is that we do have lots of robots today. We're still having cycles in the market. So, like I said, I think it's simple demonstration that anyway, humans are still in control. More than you would think anyway. So what we've done in here is that we basically altered the shape, all right? The trend is altering the shape and is altering speed, all right? So we've seen that the most things we're actually changing in here is how phase and speed behave, mostly because of the context we're changing because of natural human behaviors, all right? But now, there's one thing, all right? Like I said, this will be the theoretical stuff. I told you that I'm using a formula that can't be doing those stuff. It's more likely Eller's version that is doing this, but it's freakingly laggy, and I hate that. Like I said, I don't want something that tells me what happened. I want something that tells me what odds I have for something to happen. which means a little bit of predictive analysis in here, which is what Hilbert has been doing, and I like that, but Hilbert done it in a pretty harsh way, so I wanted something in an in-between. So what I built is my stuff, right? And the problem is my stuff will give you this type of render, right? So this, all right, is the theoretical stuff we'll get, all right? The theoretical market behavior. This is what sine wave will show you. So you need to understand why, so you can read it. Right? So like I told you, this is just normal, because this is the real representation of what we should get if we were in a perfect world. Like I said, this is the perfect world of Ehlers, which is basically having this. So it will get that beautiful, slick, slow-moving stuff, but it will have it delayed by 4 or 5 bars, and I certainly don't want that. So the only way I have to compensate those 4 or 5 bars delay is by introducing phase distortion. So I'm not going to get into real thing in here. We're talking about audio signals treatment in here, or signal treatment, so it is a specific thing. So some people get to take 10 years of study to get into these things. I'm certainly no engineer in there. I'm just good enough because I know some stuff in there. So signal filtering in here and noise filtering, it means anyway, if I want something to be more precise, I absolutely can do any different but introducing noise. How you filter the noise is just my personal mix. I can't get down this road, because if I showed you my code, you wouldn't even understand what the fuck I've done with that. So it's a noise filter process in here, trying to limit the noise and limit the lag. So I try to be lag free, but it can only be done with noise introduction. So those things I can't do without them. So you'll have to learn these things, all right, in order to be fully up to the current market speed. I cannot do anything but to introduce phase distortion. Right? So phase distortion is part of the game with my sine wave. You have to learn for this, but this is also helping me, but I'll get to explain about that later. Okay, so consider when you see this, let's try to replicate what we have and try to make it the theoretical way it should be. All right, so as for example in here we got beautiful oscillation. That's perfect. We go from top to bottom, perfect. Like we said, a little bit of phase alteration in here. Like we don't have a perfect sinusoidal thing. We're more likely oscillating. All right, but still we do have bulls and bears oscillation. All right, we go from top to bottom, we go all around the circle, everything's fine. In here, oh, something goes wrong, right? Like the bullish phase has been longer and it's been broken in the meantime. All right, but remember that this is not enough for a breakout. It simply means that phase is distorted because I want to compensate lag, right? So I can't do this. Ehlers will probably do this, but like I said, Ehlers will do this thing shifted by 4 bars, which means you'll get a pretty reliable information, but you'll get it too late, which makes it pointless. So next, all right, cycle. Oh, we do have a longer bearish oscillation, a little bit of phase distortion in here. Oh, sorry about that. This one pretty ugly. All right, we oscillate. Oh, something really is shifting in here, and then here something really doesn't behave. Here is where you got a phase breakout, all right? Sorry. Oh, shit. No way. Can I do that? All right. So the thing is, in here we do have something really didn't behave normally. As you can see, we're always oscillating, even if there is a little bit of phase distortion in the meantime. Normally, we're playing with speed in here. The thing is, sine wave is meant to predict constant speed. Obviously, you know the market isn't constant speed, because by nature, when we try to understand something, it just slips through our fingers. Mostly the market. When the market gets predictable, it doesn't behave the way it should. That's the nature of markets. They just never will be predictable. So when you think something can be predictable, it will just do it differently. So the thing in here is to accept that chaos is always surrounding you. So we're not looking for perfect models in here. We're just looking for good enough. All right, and that's exactly what sine wave is doing with timing. So this is, like I said, nature about markets, cyclical behaviors. A little bit of chaos, but still a little bit of order as well. All right, we're oscillating, we're phase shifting, we're trying to predict the market. We can do it pretty accurately, but still there are phases distortion, which means if you're too bearish aggressive in here, you will have to suffer all this phase distortion, because in here the cycle got extended. simply because markets are unpredictable. All right, in here we fucked up the timing with an extended phase cycle. All right, in here is something totally different. The phase has been so distorted that it created a breakout. In here, we don't oscillate anymore. We start to break. So in here is clearly a breakout. Because yes, that's the problem. In our beautiful markets, the market doesn't have to go there if it has to go there. If we're in this area, we can try to get close and go backward. The problem is we can go counterclockwise with markets. Like we said, we're trying to build a beautiful analogy of market behaviors with a perfect condition. We're certainly not into perfect condition. Like we said, we have a lot of phase altering. We can also alter speed, but we can also alter the direction. So the problem is in here, we're going to go counterclockwise for a bit, and we're simply going to build two bullish cycles. And in that perspective, this is what we call breakouts. So I don't even see prices in here. I can tell you that cyclically speaking, something wrong has been happening. Simply in here, that's the beauty of market prediction. That's the mess about chaos. Regarding pure cycles, that's exactly what happened Wall Street into these ugly March moments when the Fed decided to reverse the current stance. So it's been breaking market behaviors. Because yes, markets are not just about cycles. If cycles could explain the market, then that would be way too easy. There are so many external factors, momentum, trends, price action, volumes. It is way more complex than that. But cyclical activity is a reliable study of prices, behaviors through time. It's something you can use. It's not an edge to understand the market. It's something that can bring you statistical returns. Like I said, it's not working 100% times. Certainly not because of those phase distortions and most likely those breakouts as well, because we're just cheating the game. The game is that out of the perfect world we could have, we're altering it because we're impatient. We're altering it because we're stupid sheeps following the troops. And we're also altering this because we want a lag-free signal. So we introduce noise, which will give us full signal as well. And on top of this, we also have cycle breakouts with market going backwards in phase. So it's really, really complex. But still, like I said, chaotic, but certainly not unpredictable sometimes. And what I care is that whenever things are fine, you can really profit from cyclical behavior. This is not the thing that can bring you gains all by itself. What really matters is that you understand this is just part of a strategy. This is when I get to trigger a trade, I don't trigger just because cyclical activity is favorable. Right? Like we said, when the sine wave is in here, is on the bottom area, simply means that we have interesting cyclical speculative behavior. Like we said, still subject to many alteration. Phase issue with longer speed because we're slowing down speed, trend alterations, and stuff like that. And breakout risks, because at some point the market will just fuck up those cyclical activities and will say, fuck you. The problem is, think about it, what actually happens in the market when we do those type of things? Simply means our two magnets, one of those two magnets disappeared. It simply disappeared so far that whenever we go there, there's not even a single attraction, so we go backward. It's simple as that. All right? So sometimes the market is unbalanced. We're not looking at balance anyway in market. We're looking at balance through imbalance. This is those oscillations, all right? They can be altered in phase and speed, but they can also be simply broken up into pieces because this is not just about cycle in the market. The market also has momentum-based, trend-based, fundamental movement. We can move for real reasons. Like we said, in here the Fed shifting the policy has been massively impacting the market. And it's a massive, impactful stuff. I would never have imagined that would be that impactful anyway, but still, that's the reality. Right? So we combine stuff, and this is what matters in the strategy. Right? As a conclusion, you need to understand that. The way you see cycles now, all right, you need to understand that out of perfection and the reality you'll get in front of you, there is a way more complex stuff. Though you can't rely onto just cycle. You just can't rely into momentum all by itself as well. You just can't rely into prices analysis all by themselves. What matters is risk limitation is the combination of those three. Risk limitation doesn't mean you wait for the perfect condition on those three. You just wait for viable conditions and you try to limit the risk of being proven wrong. Because you can be just proven wrong with cycles, but if you have a favorable momentum in the meantime, in the same time, that simply reduces a little bit more of your risk taking. And if you're in a speculative area in terms of price analysis, that's even better. That simply means the market doesn't have to reverse there. That simply means the market is likely to reverse there if you replicate that experiment 100 times. Like we said, take 100 times a market context in which you have favorable cycles, favorable momentum, and favorable price area. I'm sorry to say that, but most of the time it reacts accordingly. So there are still some areas and timings in which those things doesn't work, because like I said, if you make it simple, you'll say, all right, I understood the market. It's all about momentum cycles and price analysis. Yes, but you still get down the same old problems. You're trying to understand what surrounds you, and that's never going to be the case. Because when you try to get it, when you think you get it, something will happen, like breakouts and stuff like that. That's exactly what happens with Wall Street recently. Wall Street simply doesn't want to be predicted. People predicted that Wall Street will be a reversing cycle and go on a bearish trend. All right? What did they do? They just fucked it up. For what reason? I mean, the why is really for those who really care about it. I personally don't care. All I can tell is that, yes, my strategy is trying to take advantage of cycle, momentum, and price and technical price analysis. We had all of those factors favorable for selling entries recently in Wall Street. It simply didn't work out, just like some trades will simply not work out. The why is something you generally get to understand afterwards. Now I know, because that's because of the Fed, that some trades have been failed earlier this year. Will I still do those trades again if I were to replay those things? I would eyes closed, simply because the answer to the errors, you always try to seek them for personal biases and stupid stuff like that. Like, we want to understand, whether you like it or not, it's hard for normal human beings to let go, to surrender. Right? But believe me, if you get to trade markets long enough, you'll get to understand that this is pointless. The longer you try to understand, the less effective you'll be into trading. That simply doesn't mean you surrender and you get to pure chaos. No, it's really sitting in this in-between area. Understanding that at some point, anyway, even if things seems to be predictable, they're not. But like I said, some people tend to believe that I'm getting fucked up with Wall Street. I'm getting pissed off because they gave me multiple losses this year. I mean, no way. I mean, I just take it for what it is. They want to play dumb. They want to play atypical. Then fine, play atypical any fucking way. You'll get back to the usual game anyway, sooner or later. It's just a matter of phase and time. Just on bigger time frames. They're trying to dephase weekly time frames. Fine, anyway. Phase will shift anyway afterwards. Because things have always been like that, and I don't think they're nearly going to be changing. So we're always using the same things. They're not perfect. Sometimes they work, sometimes they don't. But if you change the background analysis every time, this is where you make the mistake. Just consistency is key in trading. Whenever things don't work, wait for them to work again. Losing is part of the game, and if you just can't lose, then you just can't trade. So accept to lose. Yeah, I've been losing with Wall Street. They've been fucking me up. Even though I had favorable conditions, that certainly never meant they had to reverse. What they try to prove me is that they don't nearly give a shit about how predictable I think they are. They just want to show me they're unpredictable. Fine. They managed to do it. Did they manage to ruin me? No way. Will this thing go back to normal? I'll bet on this, yes. I just don't know when. I'm waiting. Whenever these things will go back to normal, I'll be there and I'll make money again. That's as simple as that. If you can't surrender, then there is a big problem. Like I said, I'm currently surrendered Wall Street. Like I said, all right, it's irrational. I'm looking at the conditions I know, the conditions I can trade, and until I get them, I'll do nothing. As simple as that. So I'm waiting for this thing to start trading again. But what happens in the meantime, I don't know. What are the explanation? Maybe I'll have them afterwards. I have the explanation for this for these timings in which everything was fine for speculation, but just the market decided it otherwise. Now we know why. We know the Fed is responsible for it. Like I said, you know it afterwards. Do you really matter about that? Does that really matter? What's your goal? The goal in here, like I said, if you think you're trying to predict the market, no fucking way. If you think you're trying to control the markets, no fucking way. If you think you're there to just pick money without taking losses, no way, it's not going to work either. Right? If you think you want to be right with your analysis, all those things are just bullshit. Right? So try to focus on the essential. All we do here is that we study momentum to get favorable conditions. We try to study cycle to get favorable cyclical conditions. Both are unrelated and uncorrelated. And what I generally tend to teach you guys is that, you know, in momentum you can have a look at sine wave and trend sine wave, all right? So I recommend you don't use both of them, otherwise the chart can be pretty messy. And if it is, then please don't use no oscillator ratio, like you put it to 0, for example, and you get something a little bit easier for you to figure out, all right? But it's still in here, it's too many informations, all right? But using the local sine wave, I don't think it's really that useful. What can be useful in speculative strategies to have a look at the trend sine wave, which is basically the sine wave, but on the higher time frame. Right? Simple as that. We're looking at a daily chart, so this is the weekly cycle behavior. Right? The weekly sine wave is in here. And you can have a look at this. Right? And it gives you the timings in which you're likely going to swing trade into the local time frame. So this is for swing traders. If you really want to try picking some intermediate trades, like this one and stuff like that, right, you can use the local sine wave, but normally you most likely want to use the trend sine wave as a reference point. So yeah, this year the turning point and the tradable area was definitely there, the 2800. This is the key shifting area for the entire year. This is where Fed has been altering those things, all right, and changing the course of this year. But without the Fed, I bet it in depth that we pretty damn bet that we would have had a bearish oscillation in here, a deeper oscillation. This is not necessarily crashing, whatever, but just they fucked up cyclical activity, all right? And as you can see, they just extended, just have a look at this sine wave in here, all right? They just extended the bullish cycle. And the bearish oscillation we had afterward, which was in here, wasn't really that long, all right? So they really take that as an oscillation. What we should have had is this, all right? We should have had something like that. But instead, what they've done this year, shifting phases, spending a lot more time to bullish territory. Okay? Right? Out of an entire oscillation, let's take it bearish reference points to bearish reference point. We spend a lot more time, like 80 to 90% of our time rising rather than selling into this cycle. So what we've done, right, use the words we just taught you about recently, right before. We just shifted phase. That's simple as that. We just phase shifted the market. But in here, did we actually trigger a breakout? No way. We just had a tiny, fast, and lower tracing bearish cycle into this oscillating market. So yeah, I tend to believe people think there is a trend in Wall Street. I can't stress that enough. There are no such things. All we have right here, right now, is an ugly phase shifting market. But on the weekly time frame, which means we rarely have weekly cycles altered, but I mean, we're in a new paradigm. People tend to believe, like I said, normally these things will likely go back to normal. That doesn't mean we can't break out, right? In here, as you can see, we're fucking up the bearish cycles as well. So breakout could be down the corner if we don't have a bearish complete cycle sooner or later. So yeah, like I said, there is high risk for a breakout, but a weekly breakout out of a mature trend cannot be anything else than a bubble and excessive market trading. So yes, we can go excessive market trading. Like I said, cyclical activity doesn't explain the market. So it is not, because there is less likely chances for a breakout right here, right now, then this won't happen. Every fucking thing can happen. It's just that now we have cyclical activity being not very favorable for bulls, right? So it's more likely a bear timing right now. We do have a favorable bearish momentum, right? Oh, not yet. I mean, right now we do have an overbought momentum more than anything else. There are no favorable momentum at the current given time, but we are into favorable reversal prices. So if you sum up information, we have favorable reversal prices, favorable cyclical reversals, timing, but still we're lacking of a favorable reversal momentum. That's the conclusion we're in right now. And like I said, I don't believe cycles are respected anymore in Wall Street, so right now I see risks about cyclical activity, no momentum, just an interesting price area. So that explains what I'm doing right now in Wall Street. I'm just looking at the market and waiting to see cycles pricing in again. That's what we're doing currently, by the way. If you go shorter time frames, still the same old gang. What I'm studying is how cycles works, how prices react to them, and how momentum builds itself. What do you see in here? I see oscillation. I like that. So let me just delete the local sine wave. All right? What I care is, have a look at this big, beautiful background sine wave. Right? Can't you see a big, beautiful cycle? It's a little bit noisy, like I said, phase distortion, because the market is pretty nasty recently, so lots of phase distortion, but we're going from top to bottom, so we're oscillating. There's no trend anymore, so I like that. Wall Street is finally balancing stuff, right? So I'm waiting for it. I'm curious to see how these things will build during the next few days. We'll have a bullish breakout, and I'll let it go. That's another bullish breakout into something I don't care about. But if we do have a bearish breakout on those time frames, like if we were breaking cycles, like for example, if this was about to shift phase in here and make a double bearish cycle, that would be fine. And if we break in here and make a real breakout, breaking down of those supportive area, and then I'll be interested by Wall Street. Until then, that's just uninteresting to me. All right? So we do have some interesting things to look for into the shorter time frames, but certainly nothing I can deal with at the current given time. I'm waiting for further information. Anyway, I hope you guys understood all those things. Lots of information today. I hope you process them. If you have any questions or stuff you might need more explanations about, stuff like that, you can ping me into Discord and ask me a message. No private message, please, because I've got way too many of them to answer. And by the way, there's some delay about it, so if you ask me personal questions, just wait a bit more, I'll give you those answers right on time. Bye guys!